Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Now coming up, subdued stocks, investors counting down to yet more data, although optimism around a pause in interest rate hikes is waning. Traders now counting down to those trade numbers, which we're keeping an eye out for you, along with jobless data too. Walmart lifts its targets. Shoppers are replacing their basket with cheaper priced items. And Cisco and Palo Alto, well, their shares are indicated lower on weak forecasts. We'll have more on that in just a moment. Just wanting to get you through the breaking news that has just come through. Let's start with the initial jobless claims for the week ending 11th of November. We were looking out for 220,000. We got 231,000. That's slightly more than expected. Philly Fed Business Index also out, -9 expected there. We got -5.9 for November. Import prices just slightly lower than expected, than the -0.3 expected. Similar story there for the export prices. Let's just have a look at the volatility index to see whether there's any indication of a move. Pretty much where it was prior to that data. Also looking at Wall Street, which of course is what it's called on our platform, although it mirrors the Dow Industrials. Not much of a change there either. Not much of a surprise given the relief we've seen on the markets after the weaker than expected data on the CPI and PPI front. It's been such an action-packed last few days. The tech-heavy Nasdaq hitting more than a 3-month high. And let me just show you the chart here for you. This is the US Tech 100 there. So you can see they're creeping back to levels last seen around July. Money market traders have now fully priced in odds that the Fed will keep rates steady in December. This is according to the CME Fed Watch tool, also now pricing in the first rate cut of the cycle, kicking off in May. Now, amid all this, the Dow Jones Industrials has broken through key technical levels and is creeping up, as I mentioned earlier, towards highs seen in July. IG's Axel Rudolph is here to explain what that means for those with open positions on the Dow.
The Dow Jones Industrial Average looks really interesting because we've not only broken through the August to November downtrend line, but have now also risen all the way back up again to the late August high at 35,099. Short term, we might actually be capped there simply because some investors will take some profits ahead of the weekend. But I would expect over the next few days and weeks further upside to take us all the way back up to the July high and probably even higher towards the 36,000 area with regard to the Dow Jones Industrial Average. Because if we look here at a weekly chart, just to make it clearer, we can see that we've had a pretty significant correction since July of this year, and have all the time held, though, above the 200-week simple moving average, and are now resuming our ascent, and are doing so quite rapidly, as we did back in October of last year, as you can see here. So if we were to, and as I just said, I believe we will head above the July high. If that were to happen, we could then possibly retest the February 2022 high around 35,862, and then head towards the January 2022 high at 36,954. So for me, the bull trend has resumed, and we are going to head into next year on a positive footing.
Aside from macro earnings, still a big focus, especially in retail. Looking at Walmart because it raised annual sales and its profit forecast as well for the second consecutive quarter, and now says it sees fiscal 2024 earnings per share of between $6.40 and $6.48. Walmart, of course, as you know, has been focused on groceries as it knew that demand for discretionary items was weak. We did see Walmart's shares creep high, but look at it right now. We'll just show this chart. Look at that red bar there. It's now, this is an all-session stock on the IG platform, down 6.4%. And if I show you the hourly chart, you'll get a better indication there of the movement. Another retail stock that we are looking out for is also Gap. This is not all sessions, but you can trade it when the main market starts going. Gap expected in the coming few hours to report a 10.9% fall in revenues to $3.5 billion from around $4 billion a year ago. Now, the backdrop in all this is that we had Target recently reporting its shares surged to its biggest one-day percentage gain after forecasting Q4 profit largely above expectations. We also are looking out for Macy's too. Macy's reporting in a few hours. Of course, that message from Target lifted shares of Macy's and Kohl's as well in the previous session. Now, just taking a look at Alibaba for you, because Alibaba said it will scrap the spin-off of its cloud unit. This is in response to export curbs by the US on chips used in AI. Now, its US-listed shares fell around 5% in pre-market. This is something that is quite key because many had been looking to Alibaba to perhaps indicate that it was going to have stellar results coming ahead. Instead, it shocked the market by instead focusing on the fact that it will scrap the spin-off of its cloud unit. Just want to show you the reaction here on the markets, because Alibaba is also all sessions on the IG platform. It's now come off quite a bit, but I can tell you that on the daily chart, showing that to you there, we are still seeing on the all sessions front down 8.6%. Now, as I mentioned earlier, Macy's, another one that we're looking out for, likely to say on Thursday that it's seen an improvement in margins and lower than expected fall in quarterly sales. Just pulling up its chart here, Macy's is one that is on the IG platform. It's not all sessions, but you can trade it when the main session starts. The US department stores net sales fell 7.1% to $4.8 billion in the third quarter. The company also logging an adjusted net income of $59 million. Cisco shares falling. Let's just show you those shares there for you now, which are all sessions, as you can see here. After the group cut its full-year sales and profit forecast, Cisco also saying that it saw a slowdown of new product orders in Q1. Now, excluding items, Cisco earned $1.11 per share in Q1. This beat estimates, and for the full year, revenues are expected between $53.8 and $55 billion. The company had previously forecast annual revenues of $57 to $58.2 billion and adjusted per share earnings of $4 to $4.08. Now, for those of you really interested in the food space and also M&A, Hotel Chocolat shares are soaring after agreeing to a takeover from Mars. Mars is set to buy Hotel Chocolat, the cash offer, 375 pence per share. This is a 170% premium to Wednesday's closing price. And as part of the deal, the CEO and co-founder will stay for 5 years. Now, this deal is very key for both, because let's just show you Hotel Chocolat shares. What Mars gets in return is that it wants to increase its foothold in the premium space. Mars, as you know, makes Snickers and M&Ms, but this will enable it to start selling things like trillionaire shortcake and expensive truffles as well. And it wants to grow internationally. So it's hoping Hotel Chocolat can do this. However, investors will want to see that it can make this takeover, this very expensive takeover, appetizing as soon as possible in terms of returns. Hotel Chocolat shares up 160%. And just a quick check on Biden and Xi's talks. US-listed shares of Chinese companies, including XPeng, JD.com and Pinduoduo, all indicated lower after President Joe Biden said he had not changed his view that Chinese President Xi Jinping was effectively a dictator, a comment likely to land with a thud in Beijing. On the plus side, she and Biden did agree to open a presidential hotline and resume military-to-military communications and work to curb fentanyl production. And just a quick check on oil for those of you with open positions on WTI and US crude. We are keeping a close eye on this very volatile financial instrument, which offers a lot of volatility to our clients because there have been so many key data points that I'm going to take you through right now. We've got US front month, that contract at a discount to the second month. The Chinese October oil refinery runs has also been slowing from the previous month. And in terms of US crude stocks, well, the rise there has been more than expected. Of course, this is all being offset as well by concerns that perhaps the demand from countries like America and China, big consumers of oil, is waning. And before we go, a quick check on the markets for you. As you can see there, this is the Wall Street, which mirrors the Dow Industrials, looking like quite a subdued start there as investors continue to digest what the CPI and PPI weaker than expected means for interest rates in the US. For more market-moving stories, do join me on @IGCom and @Angeline Ong on Twitter. Until then, this is IGTV.